Invest Africa, proudly brought to you by KPMG.
Hello and a warm welcome to this week's edition of Invest Africa. I'm NATASCHA JACOBSZ. Now, with 60% of the world's arable land and sizable water reserves, the African continent not only has the potential to increase its agricultural productivity to feed itself, but the world as well. The World Bank projects that feeding a world population of 9 billion people in 2050 would require raising overall food production, and this can only be achieved through collaboration, investment and innovation across all stakeholders. However, most African countries are reluctant to take on agricultural innovations, perhaps like genetically modified foods. Philani Nyalunga reports.
One of the answers to the question of food security in Africa is genetically modified foods. These are plants whose DNA is manipulated in labs to resist disease and drought, ward off insects and also boost the food supply. Yet a number of African countries are slow in adopting genetically modified food technology, despite its rapid adoption internationally. South Africa, Egypt, Burkina Faso and Sudan are the only 4 countries that allow genetically modified crops to be grown commercially. Not so long ago, South Africa was the only one growing GM crops, such as maize, soya beans and cotton.
When you look at the 1960s going back there, new technologies came on board, but Africa was left behind. Here I'm talking about the Green Revolution that really saw countries in East Asia being taken out of famine or poverty. So what we're saying now is that 40 years or 50 years down the line, we have now this gene revolution, which is now the genetically modified crops. And South Africa has embraced this technology, and we're seeing other countries in Africa also steadily, try to embrace the technology. But of course, they have to have mechanisms, they have to have frameworks that will allow them to adopt this technology in a safe and responsible manner. So they have to have laws and policies in place to ensure that they can harness the benefits of the technology.
The food issue is bigger than just technology. Pressure, both political and economic, play a big role in maintaining Africa's status quo. The European Union, Africa's biggest export market, is against genetically modified technology.
Europe is not very friendly towards GM, although there are some things that's happening in Europe at the moment where they are slowly sort of moving towards that. That's the first reason. So a lot of the African countries don't have GM in their countries or don't allow it because it will negatively impact their exports to Europe, to the European Union. I think the second thing is that is, although they believe that the GM is safe, they don't want to have like the multinationals selling the seed to them and they can't replant the seed, because in maize all the GM seed are hybrids, so you can't plant it next year, you have to buy seed again. And although you're getting a better yield and a better profitability out of the GM technology seed, they prefer not to be dependent on especially the American multinationals. And I think it's a political decision rather than a sort of economical reason behind that.
The economic implications are huge, because when you look at the EU, we African countries are really major trading partners. But what we're saying that over the years, the talks have been Africans should now see whether they can trade within. That's why we have all these regional trading blocks like your SADC, your COMESA and ECOWAS, to say that let's work within ourselves, because some of the conditions or restrictions that are imposed by some of these European countries, they are really affecting some of these African countries from adopting new technologies like GM crops.
But for Grain SA CEO Jannie de Villiers, technology is not the only barrier in bridging the food gap.
If I look at the African continent, there are a few things that immediately come to mind. The one is we're lacking a lot of infrastructure. If I think how the grain industry in Zambia, for instance, are almost exploding at the moment. I mean, there's a lot of new farmers coming in. They've got good land, they've got good rains, the agronomic conditions are very good. So I think there's some opportunities for us to grow there. But the infrastructure is lacking. There's not enough storage space, and some of the maize that they harvest get diseases, and because it's not properly maintained in the storage facilities. The transportation is also an issue, how to get it to the market as quickly as possible and flexible. And I mean, Zambia is fairly landlocked, so to get it to the ports is a big issue.
Investments could spare growth, as food affordability is a greater challenge than availability or quality.
It's gradually happening, and I mean, we're very positive about it. The South African companies are moving into the Southern African continent. The millers, the feed plants, the poultry houses, all of those are gradually moving into the storage people. They're all moving into these Southern African countries, and with that they bring the experience, the school fees that they've paid in South Africa, and the expertise. And I think there will be influence in those governments to change the policies, to become more friendlier towards investments. And we see investments growing in those countries. So gradually I think it will happen, and with that will come maybe a new vision around the using of technology like genetically modified. And that will help Africa to start increasing its production. And the moment we increase production, the food security issue is resolved. And then we can also start producing surpluses to feed the world.
To this, investment in cooperation is essential to ensure that millions of people have access to adequate amounts of nutritious, safe, and culturally appropriate foods. Philani Nyalunga, CNBC Africa, Johannesburg.
Now joining me in studio to explore solutions to food insecurity is Dirk Hanekom, Chairman of the Agri South Africa's Policy Committee on Africa, Zaan Meyer, Africa Head for Nedbank Capital's Global Commodity Finance Business, and in our Nairobi studio we have Dr. Florence WAMBUGU, CEO at Africa Harvest. Ladies and gentlemen, a very warm welcome. Dirk, I'm going to start with you from the insert. It's clear agricultural production and food security is such a complex issue. We mentioned politics, technology, infrastructure. But that said, food is such a basic component. And surely a society can't grow or function without having a consistent food source.
Natasha, there's no doubt about it. The food security sounds so simple. When you sit inside the food production chain as a commercial farmer, it's easy to understand it and to tell it to the people very close to you. When you, the poorest of the poor, and you sit in a rural or in a settlement, in a shanty town, and you need some support to make sure you have every day's meal on your table, there's a completely different way actually to approach this issue. But in general, food security has always been, in the South African case it has been, that the responsibility of the government obviously as well, relying very strongly on the partnership with commercial farmers. In South Africa today, the percentage that we have that micro farmers and emerging farmers or aspiring commercial farmers are actually contributing towards food security is minute. It can be more and it must be more, and there must be a strong relationship between the partners here, specifically to accommodate the different points of view. Whether the contribution is small or not is not really the point. It is everybody that can produce must accept that they all perform on the same platform. But the guidance of the commercial farmers in achieving that is crucial.
So it's a collective. And Florence, I'm coming through to you in Nairobi. Now in the insert and in the intro we talked about, Africa feeding itself and then feeding the world. But we can't feed the world if we can't feed ourselves, and charity, unfortunately, has to start at home. Now, despite being home to 7 of the 10 fastest growing economies globally, this is predicted for 2013, according to last year's Maplecroft Global Index, 75% of Africa is food insecure, and that's 39 countries on the African continent. Surely that's a shocking statistic if we look at food security going forward.
Yes, I agree that the situation is doom and gloom when you look at it from the figures. But let us still remember all the Africans are not dead. That means they are still eating something. Now, when you are looking at the whole issue of food security, there are 2 levels to look at it. There's the macro food security, which is tackled at government level. And there's the micro, which is the farmer ordinary day feeding their own children and their families. And South Africa has, and a few countries have managed to break through in the bigger picture of the government investing. And unfortunately, many of the other African governments have not taken the lead in making agriculture an investment. They speak the rhetorics of saying agriculture is the driver of economic growth, but when they come to investing, they don't see as an area where they have to invest in. They put very little money in research, very little money in storage, very little money in developing infrastructure like markets, and so on and so forth. Now, recently, I believe something is happening in Africa that is been a kind of a wake-up call. To me, the wake-up call is foreign companies coming from China or Israel or whatever, and releasing large tracts of land to invest to produce food for export. And that has made the African government to wake up and find, so this land we have been ignoring is truly the gold that will be there, which will probably not be finished. And that has brought considerable awareness that the reason why we are food insecure is that the governments has not been investing in agriculture. They have not encouraged the private sector investment in agriculture. Because when you look at the developed countries, really the seed companies are private. The government is very much doing regulatory. And I think that's going to be a turning point in realizing that it's not going to happen, no country is going to be food secure without major government involvement.
Okay.
Nigeria, to a certain extent, is starting to wake up to this.
All right, Dr. WAMBUGU, I want to throw to the private sector partner here at the desk. Now, Zan, the insert highlighted there are a lot of challenges, and it boils down to a lack of infrastructure, but a significantly underdeveloped sector. Dr. WAMBUGU mentioned the macro and micro aspects. Macro aspects is government intervention and also participation of the private sector. From an investment perspective, we've got 60% of the world's arable land, water, we've got a strong labour force. Surely that's a great place to invest them, but what's holding investors back in the end?
I think from both an equity and a debt investment angle, there are a couple of things that we have to have before we venture into a new country, into a new project.
Certain boxes that need to be ticked.
100%. And I think the first one, probably the most important one, is a stable economic, long-term and transparent policy regarding agriculture in the country where we go into. And these are simple things like, for instance, land tenure. You do not want to invest in a 10-year project if the issue of land is not addressed satisfactorily.
Because agriculture is a long-term process.
It's exactly that. So your capital is intensive and it's a long-term thing. And obviously the repayment terms are not seasonal as many people would think. We've got land clearing and irrigation. We talked about infrastructure, and I certainly am an advocate for beneficiation in country, and that type of things cost money. So I think from that perspective, a policy that would, for instance, prohibit borders to be closed for export on a whim. We cannot invest in a country where we look at a market across the borders and the border is closed because of an issue that might arise during a season. It's certainly not practical from a bank's perspective. I think the other thing we're also looking at is naturally the farmer. Mm-hmm. We're talking about macro and obviously the micro farming, and for a bank we would look at first and foremost, and Dirk alluded to it, a solid and stable commercial farming sector. And with that, I think the outgrower schemes can come. And that's how we create food security in a country where technical skills are not always right up there.
Now, Dirk, Zan mentioned policy. Now, Africa has a history of poor macroeconomic policy, and that this obviously has led to a lack of growth in the agricultural sector. This, of course, such an essential component to investment. Why are we still lacking on the policy side? We've been talking about food security for years. Talk. Where's the action?
You're talking about African policy or South African policy?
Well, let's start at home and build it on the continent. Well,
I must first start maybe with something Azana said and say when we're talking policies, he mentioned when you're a financial supporter or a backup for any kind of investment in Africa, and you look for stability, you look for investment-friendly conditions. But if you look to the continent of Africa, the 54 countries that we have, and you pick them out, where can you really find that conditions? There are not so many of them. Yeah. So you tell yourself, and I'm getting to the policy issue that you touched upon, that your risk appetite in Africa is a little bit different than other places. And the way you mitigate this risk is a very strong relationship with specifically South African farmers who's got an appetite for risk and will go into areas that many other people in the world will not do agricultural investments. And they struggle to get, for that specific reason, to get financial support and backing for their operations. And many of them burn their fingers. Now, in terms of policy, the one very difficult thing we have in Africa is that Africa, due to the history of Africa, are attached to specific power blocks in the world. You have your Francophone, your Anglophone, your
depending on who colonized
countries. First. And most of that countries, agricultural-wise, are dependent on the former colonial masters. We find it everywhere in Africa. If you go into a French-speaking country, like the Republic of the Congo, 90% of their fresh produce, this wonderful fertile land, are provided from France. Why? You ask yourself, why there was the development not there? And you come and you're there, you're seen a little bit as an intruder. So to change that policies is not that easy. Coming to South Africa, we did not sort our own house here out is not an order either. We really depend as the commercial farming sector, because farming is a business, going to lucrative destinations in Africa to find places where we need government backup. If you have a government backup, a bilateral investment treaty into place, it's much easier to go to financial institutions and say, listen, we've got a bilateral agreement between the two governments, but South Africa has decided not to honor this bilateral investment treaties with African countries for the simple reason that in South Africa our own land situation is not resolved. We can't provide prid pro quo guarantees to the country that, so the Minister said of Trade and Industry, they're not going to honor this anymore, they're basically not going to re-ratify them. But he helped us at the same time, saying from a policy point of view, we need to expand our expertise and our knowledge into Africa and our technology.
And that's something we'll unpack in the second half. We've run out of time before the break.
Okay.